Hello, welcome students. In the last video lecture, I explained you two practical sums of exercise of accounting for share capital, that is question number 8 and 10, that were based on calls and arrears and calls in advance. Now in this video lecture, I am going to explain you two different topics of the same chapter, that is accounting for share capital, that is forfeiture of shares and reissue of forfeited shares. So first of all, let us understand these two terms. First of all, as you can see on the board, I have written the heading that is forfeiture of shares. Now what is forfeiture of shares? Students, whenever any of the shareholder on which the amount is due for any of the installment, whether it may be allotment, first call or final call money, has been due by the company, but the shareholder is not paying that amount to the company on the due date, then the company is having the right to forfeit his shares, to take back away the shares from that particular shareholder. So that right is given to the directors of the company as mentioned in the Articles of Association as per Companies Act 2013. So after that, his name will be removed from the register of members and that person will no longer be existing as the shareholder of the company. Okay, so that shares will be taken away back by the company for non-payment of any of the installments. So that is called forfeiture of shares. And the second thing, that is reissue. Now whatever the shares the company has forfeited from the shareholder, that it will reissue to another shareholder in the open market, to another shareholder. So that shares are reissued at a particular price by the company to any other shareholder. So that situation is called reissue of forfeited shares. Whatever shares we have got from the shareholder due to forfeiture, that shares are reissued to any other shareholder or to any of the member in the open market, then that is called reissue of forfeited shares. Now what the journal entries would come, or what effect would come in case of share forfeiture and reissue of shares? Okay. Now let us see first of all for forfeiture of shares. In case of forfeiture of shares, number of shares decreases, yes or no? Whatever the shares which due to non-payment by the shareholder, we have taken back that shares. So that much share capital will be reduced by the company. So number of shares will be decreased. Okay. So share capital account will be debited. Generally, if the share capital increases, then we are crediting the share capital account. But over here, the number of shares decreases because we are taking that shares from that particular shareholder for non-payment of any of the installment. Okay, so share capital account will be debited. Second one, that is share forfeiture account will be credited. Whatever the share capital account, because shares we are taking back, so that much amount of shares will be reduced. So share capital account will be debited at the time of share forfeiture. And whatever amount the company, the shareholder has paid, suppose the face value of share is rupees 10. Suppose it is 10 rupees per share and the shareholder has paid rupees 7 per share and has not paid rupees 3 per share of final call. Okay, so whatever the amount per share, that is 7 rupees per share the shareholder has paid. So whatever amount the shareholder has paid, that amount will go in share forfeiture account. It will be credited by the amount paid. Suppose over here there are 1000 shares and 7 rupees per share a particular shareholder has paid. So 1000 into 7, that means 7000 will be credited to share forfeiture account. And remaining, that is 1000 into 3 rupees per share, that is of share final call, that will be credited to that particular installment. It means share final call will be credited by rupees 3000 for non-payment of rupees 3 per share on final call. Okay, so whatever amount that has been paid by the shareholder before the forfeiture of shares, that amount will be credited to share forfeiture account. And whatever amount that has not been paid of any of the installments, suppose share allotment money has not been paid or share first call or final call money has not been paid, then that particular account will be credited for non-payment of that particular installment. Okay, so always in case of share forfeiture account, again repeating, equity share capital account will be debited due to decreasing shares and share forfeiture account will be credited for the amount that the shareholder has paid before the forfeiture of shares. Okay. Company can reissue shares at maximum discount or amount forfeited. Now what is maximum discount? Suppose in this example only the face value of share, that is 10 rupees per share, and the shareholder has paid rupees 7 per share, and that shares has been forfeited by the company for non-payment of rupees 3 per share on final call. Now that shares which the company has forfeited, that shares the company is reissuing at maximum discount. Now maximum discount, how much the company can give? That is 7 rupees per share. It means the company has already received 7 per share from the previous shareholder. So now the company can reissue the shares at rupees 3 per share, because 7 per share that it has already received from the previous shareholder. So maximum discount the company can give, that is rupees 7 per share. That's why the word I have utilized earlier, maximum discount. It means up till 7 rupees maximum. It can keep the price, that is 4 rupees also, 5 rupees also, but maximum discount the company can give, that is rupees 7 per share, that amount which it has received from the previous shareholder at the time of forfeiture. Okay. Next one, that is face value, maximum discount on amount forfeited. On reissue, bank account will always be debited. Suppose the forfeited shares are of rupees 10 per share that are reissued at rupees 7 per share, and such there are 1000 shares. So 1000 into 7, that means 7000 rupees the company has received due to reissue of that forfeited shares. So that will be debited to bank account, because that much amount of check comes in the business. So our bank account will be increased. Okay. So bank account will be debited in case of reissue of shares. Face value of shares is credited to share capital account. Now I told the company has reissued the forfeited shares at rupees 7 per share. So the face value of that share, that is 10 rupees per share. So equity share capital account will be credited by rupees 10 per share, that is the face value of the share. Okay. And share capital account, amount of discount debited to share forfeiture account. The face value of share was rupees 10 per share. That face value of shares, that shares of rupees 10 has been reissued at rupees 7 per share. So bank account will be debited at rupees 7 per share. Share forfeiture account will be debited by the amount of discount given. Now what is the amount of discount? 10 rupees minus 7 is equal to 3 rupees, that is the amount of discount. So share forfeiture account will be debited at rupees 3 per share, and equity share capital account will be credited at rupees 10 per share, that is the face value of share. Okay. So in this way you have to remember the journal entries, or you have to decide that at the time of forfeiture of shares, forfeiture account will always be credited, and at the time of reissue of shares, share forfeiture account will be debited. Now whatever the balance of share forfeiture account, that is from the credit minus debit balance, whatever the difference remains of the share forfeiture account, that will be transferred to capital reserve. Okay, remember this thing. That means after the shares are forfeited and that forfeited shares are reissued at a particular discount, then whatever the balance remains of share forfeiture account, that will be transferred to capital reserve. Okay, so this is the basic concept of forfeiture and reissue of forfeited shares. Now based on this concept of forfeiture and reissue, today I am going to explain you question number 12 of your textbook of exercise, that is on page number 60 of your textbook. Let us read that question first of all. Write journal entries in the books of company for forfeiture and reissue of forfeited shares from the following information. Now you have to write only the journal entries related to forfeiture and reissue of forfeited shares. There are 3 different transactions given to you, 3 different informations given to you, and you have to write separate journal entries for all the 3 different transactions. Okay. First one, company forfeited 800 equity shares of rupees 10 each of a shareholder for non-payment of allotment money of rupees 4 per share and call money of rupees 3 per share. It means the face value of share, that is 10 rupees per share, total number of shares that are 800. Out of 800, the shareholder has not paid allotment money of rupees rupees 4, and final call money, that is 3 rupees per share. It means 7 rupees per share the shareholder has not paid. So his shares were forfeited by the company. So how much amount is paid per share? That is 3 rupees per share on application. Out of total 10 rupees share, right, 7 rupees has been not paid by the shareholder. So 3 rupees that is paid by the shareholder. Okay, so 3 rupees that is paid by the shareholder, that will be credited to share forfeiture. Okay, so the first journal entry that you can see are written over here. You are doing the format of journal entry, so no need to say it again. Directly starting with the first entry, that is equity share capital account debit. Students, already have told you just now that at the time of forfeiture of share, always share capital account will be debited. Okay, with the face value. Now 800 shares, face value that is 10 rupees per share. So equity share capital account debit, that is 800 into 10 is equal to 8,000. To share forfeiture account. Now forfeiture account will be credited by which amount? The amount that is paid on the shares. Now how much amount is paid? That is 3 rupees per share. Okay, so 800 shares multiplied by 3 is equal to 2,400. So share forfeiture account, that is credited by rupees 2,400. Whatever amount that has not been paid, that will be credited to that particular installment account. Now here there are two installments on which the amount has not been paid. That is share allotment and share final account. So share allotment, that is 4 rupees per share. So 800 into 4, it would come to 3,200. And final call, that is 3 rupees per share. So 800 into 3 is equal to 2,400. Now we can verify the total of this 3 amount is equal to 8,000. Okay, so this is the first entry for forfeiture of that shares. Now that shares are reissued. Let us read that for the further line. This shareholder had paid rupees 3 per share with application. Forfeited shares were reissued at rupees 8 per share. Now these shares are reissued at rupees 8 per share. It means the face value of share, that was rupees 10, and then shares are reissued at rupees 8 per share. So the amount of discount, that is rupees 2 per share. So whatever the amount of discount, that will be debited to share forfeiture. Okay, so the second journal entry, that is for reissue. Whatever the amount that is received per share at the time of reissue, that will be debited to bank account. That is 800 into 8, that would come to 6,400. And whatever the amount of discount, that is 800 into 2. So 800 into 2, that will be debited to share forfeiture account, that is 1,600. To equity share capital account credit, that will be credited with the face value of the share. What is the face value of share? That is 10 rupees per share. So 800 into 10 is equal to 8,000. Okay. Now first entry that I have written for forfeiture, second entry that was for reissue of shares, and the third entry that I have told to transfer the balance of share forfeiture account to capital reserve account. Now first of all, we have to find the balance of share forfeiture. Here you can see we have credited share forfeiture account by rupees 2,400. Okay, and here we have credited share forfeiture account by rupees 2,400, and here we have debited share forfeiture account by rupees 1,600. So still the balance of 800, that is 2,400 minus 1,600 is equal to 800. That would remain the debit balance of share forfeiture account. That will be transferred to capital reserve. Okay. So third entry, that is to transfer the balance of share forfeiture to capital reserve. That would come share forfeiture account debit, that is 800. How does 800 came? That is 2,400 minus 1,600 is equal to 800. So the third entry that would come share forfeiture account debit, that is 800, to capital reserve account credit, that is 800. So this is the end of the first transaction, of the first information. Now same way we are moving on with the second information. Okay. RK Company Limited forfeited 600 shares of rupees 10 each of Sunil. There is one company, that is RK Company Limited, and the company has forfeited the shares of one of the shareholders, that is Sunil, that is 600 shares of rupees 10 each. Sunil had paid application allotment money of rupees 5 per share, but had not paid rupees 3 per share and 2 per share on first and second call. It means 2 installments the shareholder has paid, that is 5 rupees per share on application allotment, but it has not paid rupees 5 per share on first and second call. Okay, so whatever amount the shareholder has paid, that will go in share forfeiture account. Okay, so first entry that will be for forfeiture of shares. Here you can see the first, again I am given the first heading. This is for the second information of second type of transaction. First entry that would come equity share capital account debit, always with the face value. 600 shares are forfeited at rupees 10 per share. So 600 into 10 it would come to 6,000. To share forfeiture account, how much amount the shareholder has paid per share? That is 5 rupees per share. So 600 shares multiplied by 5 is equal to 3,000. To share first call account, that is 3 rupees per share that the shareholder has not paid. So 600 into 3 is equal to 800. And second call account, that also the shareholder has not paid, that is 2 rupees per share. So 600 into 2 is equal to 200. Okay, so first entry that we have completed for forfeiture. Now moving on to the second entry, that is for reissue of the forfeited shares. Let us read the further line. Out of forfeited shares, 400 shares were reissued at rupees 6 per share to Mittal. It means total forfeited shares that were 600. But out of 600, company has reissued only 400 shares at rupees 6 per share. Okay, so we have to count only for 400 shares. That is the reissue of shares. So bank account will be debited by 2,400. That is 400 into 6. Okay, so that would come to 2,400. Whatever amount that we have given as discount, that is 400 into 4, 10 is the face value of shares. That shares of face value 10 has been reissued at rupees 6 per share. So 10 minus 6 is equal to 4. So 400 into 4 is equal to 1,600. And to equity share capital account credit, that will be at the face value. What is the face value of shares? That is 10 rupees per share. So 400 into 10 is equal to 4,000. Okay. So again repeating, bank account debit, that is 2,400. Share forfeiture account debit, that is 1,600. To equity share capital account credit, that is 4,000. Okay. Now completion of the two entries. First one for forfeiture, second one for reissue. Now we have to transfer the balance amount of share forfeiture to capital reserve account. Now over here we cannot directly subtract 3,000 minus 1,600 because this 3,000 is the share forfeiture amount for 600 shares, and this reissue of shares share forfeiture account, that is for 400 shares. Okay, so whatever the value for 600 shares, that we have to convert into 400 shares. Okay, we can subtract the same amount of equal number of shares. Okay, so here you can see I have converted of forfeiture account of 600 shares to 400 shares. So for 600 shares, the forfeiture account, we have credited by rupees 3,000. Here you can see I have credited forfeiture account by rupees 3,000. That is for 600 shares. Okay. So for 600 shares, forfeiture amount, that is 3,000. Then for 400 shares, what would be the forfeiture amount? So it would come to cross multiplication you will do. Then you will get 2,000 rupees. Now over here I will keep 2,000 and over here debit amount, that is 1,600. So still debit amount that will remain of 400 rupees. That is 2,000 minus 1,600 is equal to 400. Students, don't make mistake over here. Don't just directly subtract 3,000 minus 1,600. So you will get wrong balance of capital reserve. You have to first convert the 600 shares into 400 shares to find the balance of share forfeiture account, and then you have to subtract the balance of share forfeiture account to find the value of capital reserve. Okay. Now 2,000 minus 1,600. So capital reserve balance that will come to 400. Okay. So balance of share forfeiture that will be transferred to capital reserve, that is rupees 400. So the third entry that will come share forfeiture account debit, that is 400, to capital reserve account credit, that is 400. So this was an important point over here, that is to convert the 600 shares into 400 shares to find the balance of share forfeiture account. Okay. Next, now moving on to the third information, let us read the third transaction. A shareholder holding 3,000 equity shares of rupees 10 each has paid application money at rupees 13 per share, including premium rupees 10 and allotment money at rupees 13 per share, including premium rupees 10. Now the company has issued 3,000 equity shares at premium, but whatever the amount of premium at the time of application allotment that has been received by the company has forfeited the shares for non-payment of rupees per share on final call money. Okay, forfeited shares were reissued at rupees 7 per share. Now, how many shares are forfeited? That is 3,000 shares are forfeited. So, first entry that will come for forfeiture. Here you can see in the third transaction, first entry that I have done, that is equity share capital account debit, that is 3,000 shares, multiplied by face value, that is 10 rupees. So, it would come to 30,000. To share forfeiture account, how much amount per share has been paid? That you can verify, that is 4 rupees per share has not been paid. Then 6 rupees per share will be paid. So whatever the amount per share has been paid, that will be credited to share forfeiture account. So 3,000 into 6, it would come to 18,000. Next, whatever amount has not been paid, that is of final call account. So final call account, that will be credited by rupees 12,000. That is 3,000 shares multiplied by rupees 4 per share. Okay. So first entry that we have done of forfeiture. Now that forfeited shares are reissued. At which price? That is given to you 7 rupees per share. So 3 rupees per share that we have given the discount. So whatever the amount of discount, that will be debited to share forfeiture account. And whatever amount we have got for per share at the time of reissue, that will be debited to bank account. Okay. So bank account debit, that is 3,000 shares multiplied by 7 is equal to 21,000. Share forfeiture account debit, that is the amount of discount, 3 rupees per share. So 3,000 into 3 is equal to 9,000. To equity share capital account, that is 3,000 into 10 is equal to 30,000. Okay. So we have completed 2 entries, one for forfeiture and the next one that is for reissue. Now we have to transfer the balance of share forfeiture to capital reserve. Okay. So next, last journal entry, that will be share forfeiture account debit to capital reserve account credit. Now here the same amount of shares which are forfeited, that same amount of shares are reissued. Okay. So we have to just subtract the balance of the share forfeiture account. Here you can see share forfeiture account is credited by 18,000 and here it is debited by rupees 9,000. So still share forfeiture account balance is remaining of 9,000. Okay, so that will be transferred to capital reserve account. 18,000 minus 9,000 is equal to 9,000. So share forfeiture account debit 9,000 to capital reserve account credit 9,000. So students, this is the end of the question number 12. In this there were 3 different informations or 3 different transactions related to forfeiture and reissue of forfeited shares. Now I will be moving on to the question number 13 of the same exercise, that is on the same page 60. Okay, let's read question number 13. Write journal entries in the books of company for forfeiture and reissue of forfeited shares from the following information. Here also you have to write the journal entries related to forfeiture and reissue of forfeited shares. Let us see the transactions one by one. The first information that is given to you of company forfeited 1200 equity shares of rupees 10 each held by Katara for non-payment of allotment money of rupees 14 per share including premium. Now over here, whatever the shares that are forfeited, that has been forfeited because of non-payment of allotment money in which the premium amount is already included. It means the amount of premium is also not paid on the shares that are forfeited. So here one important point will come, that the securities premium account will also be debited because that amount is also not received from the shareholder. Okay. So moving on further, and first and final call of rupees 3 per share. It means the company has not received the allotment money of rupees 4 per share and 10 rupees of premium, total 14 rupees, and final call money of rupees 3 per share. So 7 rupees per share of face value the company has not received. So 3 rupees per share, that is an application money, has been paid by the shareholder. Okay. Company reissued all the forfeited shares after giving maximum permissible discount. Now this word already I have explained in the starting of this lecture, that maximum discount, it means the amount that has been already received at the time of forfeiture of shares from the previous shareholder, that much amount of discount the company can issue. Okay, so here up to 3 rupees per share, the company has got the amount of application, so up till 3 rupees the discount can be given to the new shareholder at the time of reissue of forfeited shares. Okay. Further, these shares were purchased by Kanu. Now we have to give the entries for forfeiture, reissue, and balance of share forfeiture to capital reserve. Okay. So let's see the first entry, that is equity share capital account debit. Now I have written over there that is 12,000. Why 12,000? That is 12,000 shares multiplied by 10 rupees per share. So it will come to 12,000. 1200 multiplied by 10 is equal to 12,000. Next I have written that is securities premium account debit, because premium amount that is of 10 rupees at the time of allotment that is not paid. Okay, so 1200 shares multiplied by 10, again it will come to 12,000. So securities premium account debit, that would be 12,000. If at the time, if there is a shares that are issued at premium, but that premium amount at the time of any installment has been paid, any of the last installment, suppose the previous sum that we had done that was also with premium, but there the last final call money only was not paid, on which there was not any kind of premium. That's why securities premium account was not debited. Over here the allotment money including premium has not been paid. That's why securities premium account has been debited over here. To share forfeiture account, it means how much amount has been paid per share by the shareholder, that is to be credited to share forfeiture account. Here 3 rupees per share application has been paid by the shareholder. So 1200 into 3 is equal to 3,600. To share allotment account. Now allotment money that is including premium is 14 rupees per share. So 1200 shares multiplied by 14, it would come to 16,800. And last, that is share final call, that is 3 rupees per share. It means 2 installments that are not paid of allotment and of final call. But allotment money is including premium, so it is credited with amount including premium. And over here final call, that is without any kind of premium, face value that is 3 rupees per share for final call. So 1200 into 3 is equal to 3,600. Okay, total of all these 3 credit values should be equal to debit value, that is 24,000. Okay. Now after understanding first entry, that is for share forfeiture, let us understand the second entry, that is for reissue of shares. Now it has been told that the shares are to be reissued at a maximum permissible discount. Now discount can be given only up to the amount that has been received from the previous shareholder. How much amount that we have received from the previous shareholder? That is 3 rupees per share, that is 3,600. So same amount of discount we can give, and the amount of discount at the time of reissue of shares will be debited to share forfeiture account. Okay, so here you can share forfeiture account debit that I have written 1200 into 3, that is 3,600. So 10 face value of the shares is supposed 10 rupees. From that 3 rupees we are giving the discount. So the shares are issued at 1200 into 7 rupees per share. So bank account that will be debited by 1200 into 7 is equal to 8,400. Share forfeiture account debit, that is 3,600. And equity share capital account credited by the face value, that is 12,200 into 10. Okay. Now next entry, second entry that we have completed for reissue. Now we have to transfer the balance of share forfeiture to capital reserve. Okay. So here you can see the share forfeiture account that is debited by 3,600 and the share forfeiture account is credited by 3,600. So no any balance remains of share forfeiture, that is 3,600 minus 3,600. So no any balance remains of share forfeiture that is to be transferred to capital reserve. So the third entry would not come in this transaction. Okay. Now moving on to the second information that is given to you. Let us read that first of all. Ramesh holds 600 equity shares of rupees 10 each in a company. There are total 600 shares held by one of the shareholder Ramesh, and face value that is 10 rupees per share. He had paid application money at rupees 3 per share, allotment money at rupees 2.5 per share, but could not pay first call money of rupees 2 per share. Total application money, that is 3 rupees per share, allotment money that is 2.5 per share. It means 5.5 rupees per share the shareholder has paid, and it has not paid the first call money of rupees 2 per share. Okay. Company forfeited above shares before making final call after necessary formalities. It means total you can see that is application that is 3 rupees, 2 rupees that is 2.5 that is at the time of allotment, and 2 rupees that is for first call. So total up till here the company has called only rupees 7.5 per share. The company has not called the last 2.5 rupees on final call. So we have to consider only rupees 7.5 per share, that much amount of value per share the company has called. Company has not called the entire amount of face value of shares. Last 2.5 company has not called, and before that only the company has forfeited of all. So his shares were forfeited by the company. Okay. Moving on further, company forfeited all shares before making final call after necessary formalities. Company reissued all these shares at a discount of rupees 4 per share. It means these shares, total face value we have to consider, that is called a share per share, that is 7.5. From 7.5, 4 rupees we have to give discount. So the new shares that are reissued at rupees 3.5 per share. Okay. So now we are writing the journal entries related to this information. As you can see, the first entry that I have written over here, that is equity share capital account debit, I written around 4,500. In bracket I have shown to you, that is 600 shares multiplied by 7.5. How does 7.5 came? That is the called up money per share. Company has not called this last installment of 2.5 of final. Okay. So 600 into 7.5, so 4,500. To share forfeiture account. How much amount the shareholder has paid? That is also given to you, that is 3 plus 2.5. 5.5 per share the shareholder has paid. So 600 into 5.5 you will do, then you will get 3,300. And how much amount has not been paid? That is first call money of rupees 2 per share. So 600 into 2 you will do, then you will get 1200. So that will be credited to share first call account credit. Okay. Now the first entry that we have completed of forfeiture. Next entry, that is of reissue. Now the company has reissued the shares at a discount of rupees 4 per share. So whatever the amount of discount, that will be debited to share forfeiture account. So here you can see share forfeiture account that I have debited total number of shares that are 600. So 600 multiplied by 4 rupees per share, that is the amount of discount. So 600 into 4, 2,400, that is debited. Okay. So remaining amount, total we have to consider only 7.5. Out of 7.5, 4 rupees, that is the amount of discount. So the shares are reissued at rupees 7.5 minus 4. 7.5 minus 4 is equal to 3.5. Okay. So at this price the shares are reissued. So here you can see 600 into 3.5 will do, then you will get 2,100. To equity share capital account credit, that is with the same amount, whatever amount that you have debited, same amount that you have to credit over here, that is 600 into 7.5 is equal to 4,500. Now the last entry, that is to transfer the balance of share forfeiture to capital reserve. Okay. And here you can see the first entry, credited share forfeiture account with 3,300 and debited with 2,400. So the difference that comes of 900 rupees, that will be transferred to capital reserve. Okay. So last entry that will come share forfeiture account debit, that is 900, to capital reserve account credit, that is 900. So we have completed 2 transactions of this sum. Now moving on to the third information. Company forfeited 400 equity shares of rupees 100 each, issued at a premium of 20% on face value. It means there are 400 shares that has been forfeited. Face value, that is 100 rupees per share, and 20%, it means 20 rupees, that is the amount of premium. Rupees 80 per share including premium are called up on these shares. It means out of the total 100 rupees per share plus 20 rupees, it means 100 plus 20, it would come to 120. Out of that, 80 rupees is only called up per share including premium. Remaining 40 rupees is not called up on the shares per share. Okay. So we have to consider only the called up per share, that is 80 rupees. Okay. Now moving on further, are called up on these shares. For non-payment of allotment at rupees 50 including premium, these shares were forfeited, making share first and final call. It means allotment money of rupees 50, in which the premium amount is included of rupees 20. The non-payment of allotment money, the shares were withdrawn or forfeited from the shareholders before making the first and final call. Okay. Further, these shares were reissued before first and final call at rupees 36,000 as fully paid up. Here it is being told in the starting that these shares are not fully called up. Naturally, remaining amount of 40 rupees is not called up from the shares. But while reissued, we have to consider these shares as fully paid up shares. So remaining amount that is on per share, that is to be considered as calls in advance. Okay, so this transaction or this information is very important. Let us see all the 3 journal entries related to this transaction. Okay. Now the first entry, as you can see, that I have written equity share capital account debit. Okay. So whatever the amount of per share that has been received, it has been told 80 rupees per share has been received including premium. premium amount that is 20 rupees per share. So share capital account that would be 60 rupees from 80, 20 rupees premium will subtract. So remaining amount that would be 60 rupees face value of shares that has been called up by the company. Okay, so 400 into 60 that would come to 24,000. Securities premium account that would come 400 into 20 rupees, so it would come to 8,000. So 60 plus 20, 80 rupees has been called up. Okay, out of that 60 rupees that is the face value of shares and 20 rupees that is the amount of premium. 2. Share forfeiture account. How much amount the shareholder has paid out of rupees 80 per share? That is 30 rupees per share the shareholder has paid, because it has been told that allotment money of rupees 50 including premium has not been paid. Okay, so out of 80, if you subtract 50, then remaining amount is paid per share, that is 30 rupees per share. Okay, so 400 multiplied by 30, that would go to share forfeiture account credit 12,000. Okay, and whatever amount has not been paid of any of the installment, that would go to share allotment account credit, that is 400 shares multiplied by 50 rupees per share including premium. So 400 multiplied by 50 is equal to 20,000. Okay. In bracket I have written the calculation how this particular amount came, so that you can easily understand. Okay. Now after completing the first journal entry, that is for share forfeiture, let us see the next journal entry, that is for reissue of these shares. This point is very important. Now over here I have written bank account debit, share forfeiture account debit to equity share capital account credit to calls and advance account credit. Now bank account means at which price the shares has been reissued. That is given to you in the question. Students, you can see that it's been mentioned that the shares were reissued at rupees 36,000 as fully paid out. So here you have written bank account debit, that is 36,000. Now fully paid up shares. So whatever the amount of discount the company has given, suppose we are considering the face value of the shares at rupees 100. Okay, and total shares that are 400. So 400 multiplied by 90, it would come to 36,000. So remaining 10 rupees per share, that is the amount of discount that is given per share. Considering this share as fully paid, that's why I considered the face value as 100 and not 80. Okay. So 400 multiplied by 10, that is the amount of discount that will come to 4,000, that will be debited to share forfeiture account. To equity share capital account. Now equity share capital we have got per share only rupees 60. Okay, so remaining 40 rupees that we have to consider as falls in advance. It means at the time of application only we have got the allotment money. So considering this as falls in advance, because at the time of issue we are considering these shares are fully paid up. So we have to consider over here as falls in advance of 400 into 40 rupees, that is 16,000. Okay, and whatever the equity share capital that we have called, that is of 60 rupees only per share. So remaining 40 rupees that we have to consider as falls in advance. So equity share capital account, that is 400 into 60, that will come to 24,000. Two calls in advance, that will come to 400 into 40, that will come to 16,000. Okay, so this entry is very important because here it is mentioned that the shares are reissued as fully paid up shares. Okay, so whatever the amount that we have not called up, that we have to consider as falls in advance, and that amount has to be credited, considering it as fully paid up shares. Okay, now the difference of share forfeiture, that is to be transferred to capital reserve. Here you can see share forfeiture account that is credited by rupees 12,000, and here it is debited by rupees 4,000. So 12,000 minus 4,000, remaining balance of share forfeiture, that would be 8,000. That will be transferred to capital reserve. So the last journal entry that will come, share forfeiture account debit 8,000 to capital reserve account credit, that is 8,000. So that's the end of the sum and for today's video lecture also, students. In the next video lecture, still I will be continuing with this type of practical sums from the exercise. Till then, goodbye. Keep practicing. Stay blessed.